I think certainly from the Fed you'll see the move up in rates this year. I think the Fed really wants to get back to being the Federal Reserve and actually increasing interest rates. I agree that they're going to be sort of politically neutral in terms of not having a clear insight into what the political developments might be and when policy changes might be delivered, and in that sense what we get this week will be very neutral, focusing on the improvements we've seen in the economic data. I think that overall, the Fed will have to start raising rates because any policy that does bring forward growth, or at least front-load growth, will ultimately mean that the recession risks over the medium term, over the next 3 or so years, actually start to rise. And the Fed will be thinking about how much they need to raise rates to have something to stimulate the economy again and cut rates when that recession does arrive. So I think that's the conversations they'll be grappling with at the moment. The state of the US economy for us isn't really up to debate. It continues to be one that sort of ambles along and hasn't steadily been improving, but it is getting a bit long in the tooth in terms of its cycle, and it is heading towards the later stages of it. So I think the Fed will be rather neutral when it comes out. They'll say the economy is doing well, but they won't comment on any of the proposed policies and what they may actually see, because it's still very much a foggy area.
Yeah, Kerry, I agree with you. The US economic indicators aren't exactly knocking it out of the park. They're not too bad either. So would you say on aggregate, economic activity, leading indicators, when you look at employment conditions, etc., are still consistent with 3 rate hikes this year, which is what the dot plot seems to be implying?
Well, I think the upside risks to growth are actually there, especially when we think about the inflation too. We are going to get the base effects come through in the first part of this year of the higher commodity prices, and you'll see those headline inflation numbers rise. The pass-through effect onto sort of the core inflation numbers, and particularly that core PCE or personal consumption expenditures number that the Fed focuses on, will matter, and we do see those starting to creep higher as well. So there's definitely a case for saying that the economy is improving and that rates have been too low for too long given the state of the economy.